Bloomberg Audio Studios. Podcasts, radio, news. You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
All right, let's get to one stock in the move. That's Tesla. Shares down by about 2%. They're off the lows of the session. It reported first quarter deliveries that went below analyst estimates, touching the lowest level since the second quarter of 2022. I want to talk to Steve Mann, Bloomberg Intelligence Global Autos and Research Analyst, joining us. Hey, Steve. What was behind the drop in sales? That may seem like an obvious question, but it feels like there are lots of layers here to this.
Yeah, admittedly, the 13% decline was a little bit more than what we were expecting. We were expecting around 350,000, came in at around 336. But, you know, if you look below the headline, it's actually operating as we expected. It's unfolding as we expected. China sales, retail sales is actually up despite production down year on year. U.S. is kind of flattish. Really, the dent to the quarterly sales was in Europe. Seems like March is a little bit worse than February and January. But our thesis has not changed. You know, we still think the inflection point is in second quarter. We believe China's sales improvement will extend into the second quarter. And then, you know, the Model Y has already launched in the U.S. and we expect, some improvement in sales in the U.S. as well in the second quarter.
Talk to us about the Model Y. I know Matt Miller has yet to take me in a Model Y, so I don't know anything about it. Tell me about the Model Y. Is it a game changer? Is it just a slight move? Talk to us about this new model and what it might mean.
Yeah, there's some cosmetic changes in the front end and the rear end. The lighting in the rear end is pretty cool if you haven't seen it yet. But I think some of the biggest changes are inside the user experience. There's a monitor at the back. There's a nice little cooler up in the front end. So there's people who have held off buying the Model Y in anticipation of the new one.
But how much of this is reputational damage? It might be too early to say, right, because it's still through March. But I hear you that on principle, you're bullish on the car and sales in essence. But, I mean, we can't ignore the reputational damage. I mean, I know that I'm in Brooklyn, but I see, like, get rid of your Tesla signs everywhere at this point.
That's right. I don't think we can ignore that, what we're seeing in the media and what's happening to Tesla cars and showrooms. It is having an impact. It definitely is having some impact in Europe. But at the end of the day, we feel that a lot of it is being priced in. The stock has come off from its highs since the election. The forward PE ratio is around 85 times 2025 earnings. That's just about 10% above where it traded before the presidential election. So I think the stock has pretty much factored that in. And we're looking ahead, and we think business fundamental should improve in the second quarter. Delivery should improve in the second quarter.
Does the stock need Elon Musk to come back to the company?
I think so, because he's an industrialist. He's an avid cost cutter, and that's really what you really need in the auto industry, given the price competition that we're seeing around the world. And hopefully later in the year, when he gets Doge up and running and in a steady pace, and he can maybe step off and refocus on his businesses.
What does Tesla need to refocus on? Like, what company does Tesla now need to be?
Well, they need to continue to be an innovator. I think there's a lot of debate out there why Tesla deserves a higher valuation than like GM and Ford. Look, they're doing something that I couldn't imagine anyone can do in the auto industry, which is to start a new automaker in this day and age. It's high barriers of entry, and they're doing it in a way that it's profitable, right? There's a lot of debate, but they are booking profits on EV sales, and it's hard to find, an automaker that can still do this and do it in a consistent manner.
Steve, I just bought a vehicle, and I'll have you know it is a hybrid. So I'm getting there slowly.
Okay, he's not actually driving it, but
I'm not actually driving it.
That's a fair point.
So, Steve, is BYD and the Chinese automakers, are they going to take over the EV world?
It looks like it. Time will tell. They're very aggressive. They've cornered the market in China, right? They've basically, through price, they have pushed out a lot of the foreign automakers out of China. And then, they're actually branching out into the rest of the world. Not in the U.S. They're making headways in Europe despite the tariffs there. But they're really aggressive in emerging markets, which is competing a lot with the likes of Toyota and the South Korean Hyundai. So, if you can think of, they're kind of encircling the U.S. at the moment, North America at the moment. So they don't have to be in the U.S., but if if they're strong in China and they're strong in other emerging markets, they will eventually dominate.
Okay, about 30 seconds or so left, Steve. But speaking of, when Paul bought the car, it was a Honda, and it was made in the U.S. So, why have foreign automakers been able to move manufacturing here in a way that U.S. automakers haven't?
Yeah, I think a lot of the automakers over time has been very focused on driving profitability, and there's nothing wrong with that, right? There's nothing wrong with that, and that's the only reason why people go into business is to make money. But I think there has to be a balance, I think, and driving costs is great, but can we drive costs with innovation? And I think that's what Trump is trying to do, based on his rhetoric, is to bring back manufacturing. So the question is, how can automakers actually build a low-cost car in the U.S. through innovation?
It's Steve Mann, Bloomberg Intelligence, Global Autos and Industries Analyst. Thank you very much for joining us.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts, or watch us live on YouTube.
That Musk news is really interesting. It's great for the stock. Stock's up 4%, as John was just reporting. So I'm sure the investors there are happy. Let's go right down to D.C. and get it from our source down in D.C., Nathan Dean, Senior Policy Analyst for Bloomberg Intelligence. Nathan, in the Beltway, what is the feeling about Elon Musk, his role, his proximity to the president is so close, and it's been that way since the inauguration here. But is anybody surprised that he may be leaving soon?
So I don't think I was surprised. I think this makes sense. And obviously, if you're a Tesla investor, you're going to like the idea that Elon Musk returns to the company. But if you think about it, the Doge committee, the Doge group, if you will, they've been expanding. Bloomberg News just reported a few minutes ago that Kalshi's chief regulatory officer is going to Doge. What Elon Musk essentially has done is he's created a group, and they're going agency by agency, but they can only cut so much. If they cut too much, then eventually it's going to be a political blowback. And Elon Musk doesn't have the power to go after the mandatory spending, which is where the big ticket items in terms of reducing the deficit is. So I think this makes sense. He's going to return to the Tesla, assuming Politico's reporting is correct. He'll return to Tesla, but nothing prevents him from coming back. Nothing prevents him from going into the White House. And I think if you're a Republican on Capitol Hill, you'll love the idea that maybe you're not going to have the White House calling for deep cuts to Social Security, the mandatory spending, if you will. They'll be left to Congress. So I think they may be pleased with this as well.
So this is not the end of Doge. If this is indeed true, this is just sort of an evolution of Doge. So we can still expect that to come and bring hammers to everyone's payroll here?
Absolutely. Well, at least in terms of your first question, in terms of this is not the end of Doge. Doge is going to continue. But what Elon Musk did is essentially created a group of advisors and individuals that are going in agency by agency, and they're looking at identifying areas to cut. But for, Elon's main goal of deficit reduction, he's not going to be able to do that with Doge. They just do not have the power to do that. It requires an act of Congress. So you are going to see Doge continue probably for the next year, if not a little bit longer, until they really really get to the point where they are streamlined and they feel that they've adequately right-sized those agencies. But for the big ticket items, we're going to see that in the upcoming tax debate in terms of things like Medicaid, SNAP benefits. Obviously that wasn't mandatory, but Social Security, the really key things that are really important to the deficit, Doge and Elon Musk just don't have the ability to control. He's going to need Congress to do that, and I think Congress is going to be happy they're now going to be back in the driver's seat, assuming that Elon Musk does leave.
And Nathan, I wonder if the last night's race in Wisconsin with the judicial race where Elon Musk candidate did not win, do you think that had anything to do with his decision-making?
I don't think so, but I think what last night did, it was an indication of what Republicans fear may happen 18 months from now. I mean, if you look at midterm elections, they always swing back the other way. I mean, the joke is, think of U.S. politics as like a car out of control going down the street. It hits guardrails left and right, left and right. It never goes straight. And so, the tendency here is that the House of Representatives is going to be in play for Democrats. And I think yesterday just told a lot of those Republicans on Capitol Hill that a year from now, this may be something that hurts them politically. And so I don't think anybody's going to vote off of what happens right now, 18 months from now. But I do think that this, decision for Elon Musk to maybe step away from Washington and go back to Texas and Florida and so forth like that will make a little bit of the Republicans on Capitol Hill breathe a little bit easier just because they can get a little bit more control of the narrative.
You know what this did do? We didn't talk about tariffs for 4 minutes.
Yes.
I'm just saying that news flow definitely just changed. Nathan, okay, so 4 o'clock today. I'm going to be sitting on set, on TV, going to have my terminal, NI heads for all the pros out there. What are the headlines that the literal headline that crosses, that you're going to be most interested in?
So obviously the biggest question is this going to be a country tax or a tariff, or is this going to be a tiered tariff? But, one of the big questions we're getting from clients this morning is they're focusing on what Treasury Secretary Scott Bessent is saying in terms these are a cap. He's essentially floating the idea that these are a cap, and with the idea here that potentially President Trump will be willing to negotiate going forward and bringing this down from like a cap down to a reciprocal tariff. And so the question for me is, in this statement tonight at the White House, at the Rose Garden, is President Trump going to give any indication that he'll be willing to pick up a phone tomorrow? Because if that's the case, he can come out and say 20, 15%, 20% universal tariff, whatever it may be. But tomorrow it may be different. And so you're not going to get that clarity of this is what the tariff policy for the United States will be. I don't think the markets will like that, just because I don't think that clarity is coming.
So do you expect any pushback, feedback once we do know what the policy is from either, obviously, the Democrats or maybe even some in the Republican Party?
Well, absolutely. I mean, I think we're going to see, obviously the Senate sometime today pick up their resolution to try and, overturn these tariffs that were up with Canada. And, my vote count, at least I had, the Democrats need 4 Republican senators to go along with them. And I think they have it. So you are going to begin to see a public rebuke of some of these tariffs. I would just caution, though, and say that, tariffs are the power of the presidency. Congress delegated its authority a long time ago. So there's only so much Congress can do to actually advise the president, say, maybe you should scale this back. So it's ultimately President Trump's decision. And I think that for him to be able to walk back this tariff, and this is just my own personal belief, you're going to need to see consumer confidence or sticker shock amongst things that, Americans just buy on a daily basis for him to actually walk back a lot of that tariff threat.
And of course, though, the goal is to shift the economy, though, away from fiscal spending to private-led investments. Is that a possible thing?
Not in the short term. I mean, this has been the White House plan all along, is that you're going to have short-term pain for long-term gain. But, some of these pains are going to be very, very, very permanent. I mean, if you think of just the farmer argument in particular, that, if the United States does move forward and use the USDA to implement subsidies for farmers aren't going to like that, because essentially what it means is that you're going to be thrown out of the supply chain. And in the future, maybe instead of buying goods from the United States, they're going to buy it from Brazil. That's not something you're going to be able to easily reverse. So, yes, you are going to get this shift. And we've heard from clients saying, look, I want to potentially buy a factory in the United States. I just can't do it in 2025. Probably can't even do it by 2027. So, again, it's really how long can the White House really keep with this strategy to try and transform that economy?
All right, Nathan, thank you so much. We appreciate it. And you're going to have a long afternoon and into the evening analyzing what we will hear from the president this afternoon. Nathan Dean, senior policy analyst Bloomberg Intelligence. He's based down there in Washington, D.C. He does a wonderful job of explaining all the mechanizations of what happens down there in Washington, in Congress and Capitol Hill, and in the White House as well.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
In D.C., it's not just about Musk. It's not just about tariffs. It's also about TikTok. Potentially, President Trump is weighing plans for TikTok's sale today at a meeting. We want to get more on this with Matthew Schettenhelm, media litigation analyst for Bloomberg Intelligence. He joins us now from D.C. All right, remind us of where we are in the law and what Congress did and where we're at here.
Yeah, so we are at the point where Congress adopted this law last year that effectively bans TikTok in the United States as of January 19th. The Supreme Court upheld that law after TikTok brought a constitutional challenge. And then President Trump adopted an executive order just before the law was going to take effect in mid-January to say that, look, companies that are at risk under this law, don't worry about it right now. We're not going to enforce that law. So app stores like Google and Apple and Oracle, companies that host TikTok, potentially faced, billions of dollars of liability under the law. Trump's attorney general sent a letter saying, don't worry about it. We don't think you're in violation of the law, so you can continue to host TikTok. That executive order from President Trump ran for 75 days. That takes you to Saturday, April 5th. So we're at the point where there's likely to be some action. And that, as you said, there's a meeting in the White House today.
It's a good time for this discussion, Matthew. A red headline crossing the Bloomberg terminal as we speak. Amazon puts in a last-minute bid to acquire all of TikTok. What do you make of that?
That's fascinating. I mean, to me, that underscores how far we are away from a resolution here. And you're talking about, some indication that a deal could be in place by Saturday. I don't think so. There are so many moving pieces here. And new bids coming in, that the idea that all of this is going to be resolved in 3 days seems pretty fantastic. So I think what you're likely to see is sort of some indication of movement towards a deal, and President Trump again kicking the can down the road. And the only question is anyone going to stand up to that? There was a lot of political courage to advocate for a ban of TikTok last year. There were some votes in Congress that were 50-0 for it. But now President Trump has a warm spot in his heart for TikTok, as he says, and suddenly some of that courage is falling away. So that's going to be the interesting dynamic, is how much lawmakers or maybe TikTok's competitors stand up and say, hey, we have a law on the books here that bans TikTok. Are we going to enforce it or not?
So to that point, I guess I wonder what part of TikTok is still left to be bought. In that, is it just going to be the U.S. stuff, which may not be as valuable, or is it going to also be the technology that kind of sits in China? And if that's the case, how do we get that?
That's sort of the million-dollar question here, because there was a lot of pushback in Congress for the idea that a company tied to China would still have control over the algorithm. And a lot of the solutions you're seeing floated around look a lot like what TikTok was pitching as Project Texas last year, where the U.S. operations would work here, maybe under Oracle or someone else, but the algorithm would still ultimately be controlled by ByteDance. And the question is that the sort of solution that we're talking about here? Because ultimately China and ByteDance need to agree to this. And with Trump kicking the can down the road on this ban, I'm not sure they have a lot of concern. I don't know that the U.S. has a lot of leverage to force them to sell the algorithm. So it seems very likely that we're looking at some sort of solution that keeps that algorithm tied to China, tied to ByteDance. And the question is Congress going to be okay with that now in a way they weren't last year?
I mean, silly question, but there's no indication that ByteDance wants to sell here. So, I mean, an Amazon bid is impressive, but I don't think I've got a seller there, do I?
That's been the problem, through this whole process is ByteDance really willing to sell and especially the algorithm component here with China needing to bless that. So yeah, a lot of offers, a lot of talk, but I think we're far from any sort of final resolution here.
So to that point, this goes back to the earlier headline that Paul just broke, that Amazon's putting in that last-minute bid to acquire all of TikTok. This is according to the New York Times. Who else quickly is on the docket to potentially buy?
Yeah, so I mean, you keep seeing Oracle mentioned as a potential bidder. You saw Frank McCourt was on Bloomberg Television earlier, and a number of other names, floating around. I don't have great visibility into all those offers. I've heard 4 offers, talked about, but I think we'll learn more this afternoon after this meeting as President Trump considers next steps here. But again, a lot of open questions on the law and big questions politically of whether people are going to advocate for the law that was adopted last year.
All right. So, Alix, that Matt does all the litigation around the media communications industry, which means he's going to be going out to the NAB conference out in Vegas, National Association of Broadcasters. So I asked him offline, where are you staying in Vegas? Because that tells me a lot about a person, His response, he didn't know.
Yeah, Paul did not like this, by the way.
Matt,
I booked someplace. I got to look it up, Paul.
Oh my goodness, because when I was out there, first it was the Mirage, then Bellagio, now it's the Wynn. But it says a lot about it.
But if you don't know where you're staying, that just means that you got nothing going, Matthew. Lots of shade. Matthew Schettenhelm of Bloomberg Intelligence litigation analyst. Thank you so very much.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.